So in like June 2020, Sasol warned shareholders to expect losses between 146 Rand and 148 Rand per share. And the CEO, Fleetwood Grobler, said it was attributable to three things, being the COVID-19 pandemic, the collapse of crude oil prices, and a very weak macro environment, culminating in a 91.3 billion Rand loss and a heavily leveraged balance sheet. And just over the last few months, I've heard a huge conversation like just around balance sheet of Sasol and like people putting stuff that doesn't belong in the balance sheet, like someone would say like, yeah, the remuneration of the management is in their balance sheet and look how it's looking. And I'm like, it doesn't really go in the balance sheet.
What do you mean they say it goes onto the balance sheet?
They'll be like, Sasol's balance sheet is horrible. Their remuneration is on their balance sheet and it's horrible. And I'm like, I think you're misquoting. I don't think, you really kind of understand.
How does it go on the balance sheet? I don't understand.
It's a tweet, man. I'm like, I just look at you like, I don't think you really
understand
get
what's
what a
going
balance
on.
sheet. So I wanted us to
unpack a balance sheet.
Unpack like a balance without getting way too technical on what a balance.
And I think it's a good way to look at the value because Sasol is a very old company and it's it really falls into that category, that Warren Buffett category of being a long-lasting company that's really built up a strong balance sheet over time. It's like being able to deliver profits over a long while, paying constant dividends. That's like cliche or definition of Warren Buffett
one
companies.
Of the stars of like, especially the JSE in just South Africa, is just like one of like our shining stars, and we're protected.
Yeah, one of our great. Yes. Like it's always been one of those companies that give South Africans a unique opportunity, like Naspers and Bats, to actually invest into a very diverse multinational company that earn a lot of the income given in US dollars, which also protects us from that foreign currency risk.
And like Josh said, Sasol is really old. It's 70 this year. So they were celebrating their 70th birthday a while back. And they employ like 30,000 people in 33 different countries. So they just practically
And it's scary to think they actually just started in South Africa.
Yes. It's less than 100 years old. It's crazy.
What Sasol I think is like
in Sasolburg, yes.
Yeah, and it's literally stands for Suid-Afrikaanse olie en steenkool and Afrikaans basically for coal and
I actually knew because I was telling Josh this earlier. I have a sibling who worked at Sasol because she studied Chem Eng, and she was telling me like a little bit about the history because I was just asking her, and she was telling me stuff like they actually, because they started in Sasolburg, and I was like, oh my gosh, Sasol is so cool. They got a town named after
That's what I said. See,
and then she was like, actually, fun fact, they named themselves after the town. So they took in Sasolburg, yes, and they took the Sasol, and then there was like a thing.
I thought Sasolburg was after Sasol.
I was like, that's the coolest thing ever. But it could practically be because we'll go into that conversation. But she was telling me
it's basically it's the economy of Sasolburg is driven around Sasol. So
it's scary.
And there's actually a lot of things like that, a lot of companies like that. The town is literally centered around a single company.
The extent is really scary though, because she was telling me, I was asking her, why does it look so old? Like, why don't you, is a fuel plant supposed to look old? And she was like, not necessarily. The thing is, any upgrade to these fuel plants is going to mechanize them. And that's an economy of a town.
Oh, shit,
and I was like, wow.
Whoa.
And she's like, that's like what they think about. It's just like, we can still keep employing these people. It's not costing us that much. If we do upgrade this, it's going to really cut down a lot
how many
of
people
jobs.
does Sasol employ? Do you know?
33,000 internationally. I don't know, like, and Sasolburg.
That's a lot.
That is, 33,000 is a lot of people.
And that's like,
and it's a very big contributor to the South African economy.
4% of tax revenue. That is insane. 4% of tax revenue.
It's like the top 40 companies cover 80% or 90% of South African tax revenue.
Yes. They foot 4% of the tax bill.
First Rand alone pays over R1 billion in tax every single year.
Yes, and they foot 2%, ironically.
What?
2%.
So Sasol pays more, obviously.
Curious fact, First Rand employs more though.
Really?
Yeah, internationally they employ 45,000 people.
I mean, I think Steinhoff, before it's like the major collapse, I might be wrong, but I think it's around 130,000 people who lost their jobs because of the Sasol thing. The Steinhoff thing.
Really?
130,000 globally.
That is intense.
It's incredible that a single company can employ so many people.
That is intense.
Yeah.
So before we dive into the balance sheet, basically, for those of you who don't know, a balance sheet is like financial statement where you view the position, the financial position of stuff. So you look at all the assets and the liabilities and the equity. So you look at the assets of a company and what's funding these assets. And so I wanted to explore some of these elements of what's happening in this balance sheet to kind of get an understanding of what's really driving this financial position that Sasol is seeing itself in. And the big thing you get when you do Google Sasol is the Lake Charles chemical project. Like, you can't go past Sasol and be independent of Lake Charles. They love Lake Charles. And basically, it's this infamous...
The news loves Lake Charles with reference to Sasol.
And basically, Lake Charles itself is actually supposed to be a super futuristic kind of chemical plant. It is. It's not supposed to be. But it's this thing that Sasol announced that they were going to build in America. And they took on heavy debt to build. And they just started having production overruns. And these were very continuous. And they had a budgeted cost of $8.1 billion, which is a lot of money.
And it was a big lack of the miscommunication between the two parts. So that's actually why in 2019, some of the executives and the CEO was replaced because of that extremely bad communication in the Sasol group, where they almost had this culture of don't tell me the bad news, don't only tell me that it's going to get done.
Really?
So they had this very, very bad communication culture of not telling the truth, not telling someone, listen, this is getting way too expensive. It's not happening. This is it's costing us this much money, and it's going to result in all these things. And actually, just that communication gap.
Yeah.
Imagine if we had like
The bad oversight and stuff.
Yeah,
And that's
imagine
kinda
if we had
like-
like
if the
an
CEOs
inclusive
just
company
knew.
culture. Imagine if I think we often underplay company culture and just culture in general in corporate environments, and this may be a good example of
Where
how
it's-
they may have
it's
aided
super
them.
important.
Yeah, how important that communication is. Being
There's-
able to speak up, say. Communication is extremely important. I remember I read in a book sometime, I think it's in Outliers, might be in a different book, where they spoke about how important communication is, and where they took the example of airline businesses, airline controls and so on, how important actually culture is and the communication through that, where they actually showed that in companies, he used some sort of measure to measure like how easy it is for a young person to speak up to a senior. So, or not a young person, more like entry-level job to speak up to a senior. So now in the flight world,
It is an Outliers.
They have like 3 people in the cockpit for like even just the co-captain, co-pilot to speak up to the main pilot. Well, like how difficult it is for him and how acceptable it is for him in that culture.
Yeah.
And especially in the Asian and Eastern cultures, it's very, you're not allowed to really speak up to your senior. Like your senior knows what's going on. You have to respect them. You can't really ask questions. When they do something, you just accept it. In the Western cultures, there's a lot more where even children speak up to grandparents, tell them what's up with you. Which is sometimes weird. But in the scenario of where it's really important to communicate is very good. Where the Eastern airlines had like 3 or 4 times more crashes compared to the Western world, because the co-pilots could speak up and ask like, why did you do that? I think that's wrong. And then the main pilot was like, yes, I did make a mistake, and they fix it. And it's just that communication, just telling someone, listen, I think you made a mistake, that actually saves all those people on the planes.
It really could have.
And
also,
that's
also
very,
saved Sasol $4 billion.
Yeah.
That's half of what the original plan was, because they had a budgeted cost of 8.1 billion and it went up until 12.9 billion. And on top of that, they just had like the most unexpected of stuff happen. Like they had heavy rain in 2017 and that caused extensive damage. And I remember they were starting to operate at the beginning of the year. Then there was just like some weird fire that happened on the plant, and that caused damage to one of the parts of the plant. So it was operating at 86% capacity while the other part was being repaired. And now there's a hurricane going on in that area. Yeah. And now they're still assessing the damage and seeing if they shut the whole plant down again.
Yeah, it's just been like a snowball of bad things that happened to
It's intense. It's intense. It was really sad before the hurricane, because they were finally operating at 86% capacity, and it was like, wow.
But they finished it now, right?
It was finished. Well,
Wasn't it like...
it was done, and then there was a fire in January, and so one of the parts of the plant had to be repaired. So it was done, and then one of the parts of the plant had to be repaired. and it was still under repair, still wasn't running, and then they had they had a hurricane a couple of weeks back, and it's just like, talk about bad luck, talk about a tough time, dude.
Consecutive, man. I think, isn't that why like the joint CEOs resigned though? Was like the estimation of like the cost to win. Like,
yes, that was because of the Lake Charles and that bad communication.
And so a big problem with this is they were raising depreciation. So depreciation is, I know the formal definition, the systematic allocation of an asset.
It's basically expensing it, or like by the way you use it. Because if you think you can use something for 5 years, you'll just expense that item over 5 years rather than expensing it in a single expense. Because then,
so the initial problem was they were raising depreciation on all of these items, but they weren't making a profit from this plant. And that got further kind of compounded by this huge impairment they had to raise. So impairment is like an acceleration of your depreciation, because you kind of have like
a huge loss.
You basically say you won't get that value back ever. Like what you spent on it, you're not going to get it back. So you recognize that expense now.
Immediately.
I want to ask you guys, do you think the impairment is fair on the plant? Because it feels like to me, it's not really based on the output or the economic value in the future, more than it's based on like how people are looking at it now, the outlook on it now. Do you guys think it's fair?
It's a very... I think it's going to take a bit of a conversation to get to that, where the fairness, because how I would think of it, I think it is fair because they had to impair it because they have to sell it.
Yes.
Right? They have to sell a piece of the plant.
So they have to value it.
So they have to value it. And because impairment, the accounting rules work like that, that when you impair something, you have to impair it to the value that you'll get from it, and if you're going to sell it, the value you'll get from it is the selling price.
The value you're going to realize from it.
So, and there's a lot of things that play into that selling price, right? Firstly, in South Africa, and it also had a massive impact on the rest of Sasol, was the big drop in crude oil prices, which had a big impact on the petrochemical industry, right? And I actually did some research in the petrochemical industry has been doing really badly since like mid 2014. Obviously, that's driven by a lot of this moving towards or global warming becoming more and more, like we're becoming more and more aware of it, and there's a lot of political and economic drive behind going after sustainable energy, and obviously fossil fuels. Petrochemical companies use fossil fuels to make energy, right? And since mid 2014, that's when when the petrochemical index, the global petrochemical index, was at its top, and that's actually when Sasol share price peaked as well.
411 billion market cap.
Yeah,
that is crazy.
Since then, it's the global petrochemical index has dropped with over 50%.
Wow.
Since 337 points to where it's 170 now. Where it's closer to the base year in 1993 than it is actually to 2014. Just less than like in 6 years, which is crazy.
That is a huge movement.
So that's the one thing that I think really affect the asset prices.
Yeah.
And actually, I listened to a podcast the other day of David Rubenstein. He's he's actually the founder of one of the biggest private equity companies in the world.
The Carlyle Group.
Yes. And he actually said there's a massive opportunity for private equity firms in this drive down in the global petrochemical
he thinks it'll pick up value?
Index. No, he says it won't pick up in capital appreciation.
Okay.
But the cash flows you can get from these assets are crazy, even in the next 5 years.
Yeah.
So he says the fossil fuel, all these companies it won't just go away within 5 years.
Obviously, they won't just disappear. Yeah.
And what they've actually been doing is just buying all these petrochemical and fossil fuel oil companies at like a massive discount to what the companies. They buy like a 50% discount, and then in the first year they make like to a 30 to 45% cash flow return on that investment.
Not a capital.
So they leverage up crazy on that, and they're like, okay, it's fine to do for us because we can leverage it up so highly because of the high cash flow. We make back our money within 2 years or 2.5 years, and even if we have to write down the whole thing, we still make, with that leverage, 90% returns on these investments.
What do you think about the ethics behind that?
Okay, that's not part of the discussion. Okay, there's obviously
a little trigger.
the morality behind it is a different discussion. But he's managing a lot of pension funds. He's seeing, a lot of the institutional investors give him funds, and he has to give return to those. And if he can use this, it's like that cigarette butt investing strategy that Warren Buffett used when he started when he started with Berkshire Hathaway. Berkshire Hathaway was actually a milling company that. And he bought it as part of the cigarette thing. He was like, let's just use this company as the actual investment corporation. So it's that same thing of like just getting that last use out of something that's going to die in a couple of years. We don't think Sasol will die. We don't know where it's going to go. We don't know what our alliance is going to. But obviously that has had a big impact on the
outlook.
Now to get back to the impairment, they have to value this half of the Lake Charles plant, which is they think of selling to equity party, which is probably going to be a company like KKR or Carlyle or Blackstone, one of those big private equity companies that can just take up this position. They have to measure it down to what the asset prices would be compared to what it would be if they just did the cash flow, which is using the asset. Just because of the drop in that oil price, and they have to cover the cash flows that they're losing now from not being able to sell their oil or at the whatever rate. So if they make a barrel of oil at $35 a barrel and the barrel price in the market is 32, obviously they're going to make losses and they're going to have massive cash flow issues. So just to cover that expected outflow, they have to sell it. They literally just have to sell it to restructure their balance sheet and reduce their debt. So it's one of those distressed sales, which actually poses a big opportunity for private equity, which is actually like what private equities want. They want stuff like this to happen.
Undervalued assets.
Yeah.
It's just the impairment charge was massive.
Yeah.
Though. It was 91. It was 99 billion.
Yeah,
so
99
the total
billion
impairment
rand.
charge was over 100 billion rand.
Yeah.
Like 112 billion rand. And majority of that was from Lake Charles, which was 99 billion rand. And obviously, another thing they cited is a weak macroeconomic environment. So you have to understand that.
Yeah. So this is all the thing that plays. It's a whole thing that plays together. That's just like a.
It's like a compounding issue.
Yeah. You have to understand that this 99 billion rand is not really originally in rands. It's in dollars. And so this impairment charge gets more the weaker the rand gets and the stronger the dollar gets. And that's like another thing they cited as like just a weak macroeconomic environment in that regard of, number one, we have this whole big negative outlook on us, right?
In South Africa.
Yeah, in South Africa. So we've had a downgrade the last couple of months. And then secondly, so it just makes us riskier and just more expensive for us to do activity. And then secondly, as a result of this too, there's just a weaker foreign exchange rate. And all of this has to be translated into South African rands. And that really has played like a huge part and a huge knock on their financials. And they just express just concern around that. And they say that really kind of also helped kill them. But what I found was very interesting for me was just the foreign currency translation reserve. And so
it's massive.
Basically,
like it's like a third of their equity.
Basically, what foreign currency translation reserve is the fact that IFRS at the end of the year, the International Financial Reporting Standards at the end of the year, require you to remeasure your assets and liabilities at the current foreign exchange rate on closing date.
Yeah.
Right?
Yeah.
So even though it didn't really change and nothing really happened, there can be a huge inflow of not profit, but it's called other comprehensive income.
It will in the future be profit.
Yes.
So if I buy an asset for R5, like if it's I buy it for $1 and the exchange rate when I buy it is $1 is R5, so it costs me R5, but at the end of the year it's 10 rand a dollar. Then you remeasure that dollar to 10 rand. But in the future, when you sell it, I will get 10 rand. Yeah. So I'll realize that extra
so
R5.
Unrealized gain.
So it's unrealized gains or losses, which you can't put through the P&L yet.
And so the movement through this reserve, what I saw, I was so shocked. When I saw it, like just on the face of like the statement of profit and loss was just so shocking. And it actually kind of made the results look better than they actually are. Well, in kind of real terms and in cash terms, it kind of made them look better than they actually are, because they had this huge loss and then they had this huge movement in this foreign currency translation reserve, and it kind of, they still have this huge loss, but it kind of cushioned it. And I found that really interesting
because of the weakening rand, because they have foreign assets. But the thing
found it's really interesting because it's working both in their favor and against their favor.
But it will, yes, in the future it will be in their favor. So the inflow, so they spent $1 billion or $1 billion when the exchange rate is strong, and they impair half of it, but the exchange rate weakens with 100%, and you sell it at half the price, half dollar price, you still make back all your money because of the weakening exchange rate. So it does work in their favor when they sell off of Lake Charles now. If it would be the best for them if the rand goes down to 25 rand a dollar, and they can bring back that cash, because it really softens that blow. The problem is, what can happen is you can expend it in a weak exchange rate, and then suddenly the rand, what we've actually seen happening, the rand just suddenly strengthens, and then they make a massive loss on that, because they're not allowed to keep that money offshore there unless they.
Do you think they'll hedge against that? It's good financial practice.
Yeah. Well,
I wanted to ask you guys.
It's so risky that it can bring down the company completely.
Yeah.
It's too big a line item.
It
55 billion.
Yeah.
55 billion.
It's that.
It can bring down, if that edge goes the other way, it will bring down the company completely.
I want to ask you guys. I wanted to ask you guys that, do you think it'll be hard to look for a potential buyer, but it really won't? I think, as you kind of highlighted, because they're currently so undervalued in a sense. Do you think they'll have a hard time picking one?
I rate Carlisle's going to jump in there. Honestly, I think because David Rubenstein has been really
shooting at
keen for this. He's been loving the returns he's getting from these undervalued assets.
I wouldn't count out the East from jumping in there.
Oh, also because they don't really care. They don't have. There's nothing because because Carlisle might have like their fund providers or the institutions that provide them funds might tell them like, no, you're not allowed to really be in, or they're only allowed to, like in their mandate, allowed to be like 5% in fossil fuels or so on.
And before we go into like the effect of just the oil prices, I want to just kind of finish like the asset section of this balance sheet. And this kind of, all of this activity, especially COVID-19, put a lot of pressure on their liquidity, especially because they aren't getting the amount of income they would be getting. Firstly, because commercially, all Sasol garages are not closed, but less foot traffic. Well, I don't know if you can call it foot traffic, four-wheel traffic.
Especially to the consumer face.
Yes.
Yeah. So businesses.
Consumer face, obviously, there was a significant drop in just cars coming and getting filled in. And then on the plant side, they had to shut down, especially during the initial hard lockdown.
Yeah, they closed some plants, right?
Productivity, yes, they had to stop productivity. And they just had to shut down, and everything just had to stop. And I can imagine that would like kind of,
which is actually just like that pushed the Lake Charles over the edge, because that's what resulted in them having to make the sale, because they literally can't manage the debt and the cash flow issues. Because I think if nothing of this happened, if COVID never happened, everything was fine.
Be able to manage it.
I think their balance sheet was strong enough. If everything went okay and Lake Charles was the only issue, they might only need to. They could even have like a rights issue just to keep that, or just sell off maybe 20% or whatever. I think they could have maybe kept their hands on it, because, like you said, it's a very developed and futuristic.
Yeah. It really is like
it's plant with like crazy. Massive, like great technology.
Yeah.
So even if the petrochemical industry is maybe on a downward slope, it might give them the returns that David Rubenstein.
Another huge thing that also put like a huge pressure on their liquidity was when they ousted their two previous CEOs. It cost them 96 million rand.
Is that the golden handshake they gave to those folks?
In the separation packages. And they also said that to add on to the foreign currency, just the woes, they had to pay the other one in dollars, bro. So it was just really sad. Because they have to pay the other one in dollars in a weakening rand in a downgraded economy. And he's just paid in dollars. So that was just insane. And the other thing they had to do is, and we're going to talk about the oil price now, they had to set aside $2.5 billion as a buffer for the volatility that happened with just the oil, the hedging or the lack thereof of the oil prices. And Randy's just really keen to talk about that. So what happened, bro?
March, man.
March happened. March 2020.
March madness, man. So OPEC, kind of the largest contributors to oil to the rest of the world, right? They had an agreement, and there are a few naughty boys in there, your Russians, people that don't really comply, and it's been an ongoing thing even throughout the pandemic. Because what we saw is in 2019, late 2019, we started seeing the impact of COVID in the East, and it slowly started coming into effect in the West as we came into 2020, and as a result of hard lockdowns and people not really moving around, so oil, there was an issue at first, is that there was an undersupply of oil, right? And then with the lockdowns coming in, and they started getting oil back, right? So the supply was coming back, but the issue is now that we're into a demand shock, right? And then so
the demand is decreasing and the supply is
increasing, right? So now the naughty boys started oversupplying, and then
they just started pushing stuff into the market.
Wow.
And not because they all had an agreement to keep it at a certain price. So that like everyone takes the hit, right? So Saudi Arabia and Russia just started flooding the market, right? With oil.
And then
they wanted to squeeze out. It's a very big strategy of the people who are capitalized, or the companies that is capitalized strong enough to take out their competition by doing this. So some companies, like probably the ones that was able to flood the market with oil, had enough cash flow and could actually take
that hit,
a lot of losses to squeeze out a lot of their competitors out of the market, like we potentially see Sasol maybe exiting oil or whatever. We don't know what's going to happen, but like just that squeeze, we saw what impact it had on one of South Africa's strongest companies. And they could take that loss and squeeze out. We don't even know in the rest of the world. I can tell you now, there's maybe 50% of their competitors probably had to close down shop.
I'm not afraid of a lot of things, but I'm really afraid of the oil business, gents. I won't lie to you. It's just not a business.
Especially because it's such a price taker. If we see it like it is now, I mean, they can literally just drive it down below if they can make a barrel of oil at $10 a barrel, right? And you make it at 30. Do you think they're going to want that barrel of oil to be over $30? No, crazy. They're going to try to keep it at 15 because then they make their profit, but you close down shop, and when there's no competitors, $100 a barrel, $200 a barrel.
That's crazy. So Randy, what does this have to do with Sasol? Yeah, sure, they're in oil, obviously because they're in petrochemicals, but like, then what?
Now the issue is, as obviously we were speaking about Lake Charles and the compounding issues that they had, right? And now it's the factor we have to factor in is the cost to produce oil, right? And the cost to store oil was increasing because of the oversupply, they have to store more oil, and then meaning now you have to get new places to store oil, and now people were literally giving away oil because they didn't have enough storage facility.
There was a meme going around.
That was for the other oil though, West Texas oil.
Oh, was that only West Texas?
That's a different So OPEC, which is the oil that I think West South Africa,
because West Texas is
in America, right? So West Texas oil is actually traded that you actually buy oil. You buy actual oil. You order it. You order oil, but you make money from that by ordering it now and selling that order later. Right? So then what happens is, because you can't sell it because the price is so low, now that oil actually pitches outside your house.
That was a big meme. Some guy was just like, bro, I traded oil on the Goldman floor. What am I supposed to do with this?
No, what? No, there's oil there. So that's why the actual West Texas oil price went negative, where it was seen like trash. But OPEC just stayed above that because obviously you just trade the paper.
That's when they kind of reached that like little agreement, because it was dropping to such a low point that everyone was feeling it.
Because they didn't meet their first agreement. They had an agreement before. It wasn't the first time they reached an agreement. And the huge thing was Sasol didn't hedge this. Was this?
They did after a while though. They saw things were going down.
Yeah,
that actually it was such an interesting time for me to look at the share price of Sasol during that time. It was really entertaining, and there was so much to learn through it because so Sasol's share price dropped drastically.
It's like 64%.
It tanked crazy. Then the news came out that they've hedged it at just above whatever they make. Then now Sasol started trading at the inverse of the oil price.
That's crazy.
It was crazy. I was looking this because it was obviously at the beginning it was directly correlated, and then when they hedged it, it started trading inversely correlated.
I think that's where the consumer behavior came in, because you just saw like everyone I knew was like, "Do you buy Sasol?"
Yeah,
you buy Sasol.
But it was so interesting for me, because obviously now, if you hedge it at 35 through whatever foreign currency, or why don't I say foreign currency? Let's say you hedge it with an
oil future,
with a contract, with a future.
Yeah.
Then if it goes over what you hedge it at, you're losing money. Obviously through the
out of the money.
But if then you're out of the money. I don't know if they got an option. I don't know if a bank was keen to take an option on that, because I mean they could always just.
Can I ask you guys, was it reasonable for us to expect Sasol to have hedged this before, or was it?
I honestly don't think they ever thought this was a possibility.
I don't think anyone thought that was a possibility.
I think you may hedge like 5%, or they just see like, okay, I don't think it's going to go there. Let's just do like the chances of it happening is 5%, so let's hedge 5%.
Okay,
but it went. So
and
then they had to hedge.
Go.
How much did you think they had to? They probably had to hedge like around 20, 30 billion rand.
Imagine the fees on that, dude. Someone. Ooh.
Hey man,
someone had a really nice quarter, man.
Someone got a bonus.
One of the thing that they actually had to raise. Let me check here. I think it's.
That's insane.
They had to raise. Let me just get to the cash flow statement. They had to raise 19 billion rand in short-term debt. 19 billion rand in short-term debt to just take that impact. Which, I mean, I still like Sasol, because even if you look at their cash flow statement.
Let's not look at the cash flow. Let's just talk about Sasol.
Look at their cash flows. Even during this whole thing, the cash from operations, that's like just from doing business, was still more than their 2018 financial year.
That's what.
So it was just under 2 billion, less than 2019 year of assessment.
That's what their management is carrying on, like, and kind of trying to calm shareholders down with.
Because it's really a short term.
We have the infrastructure, like, guys, we have the infrastructure to make you your money. It's just been. It reminds me of
the short term hit is just massive, and they really have to work hard to restructure that balance sheet.
It reminds me of when I was watching an interview with Jeff Bezos and David Rubenstein, ironically, right? He was being interviewed on like Bloomberg Finance, and they were asking him like, weren't you like crapping yourself during the .com crash? And he was like, not really, because it was such a crazy time where our share is crashing, but we have this infrastructure.
He went and bought more of it, eh? He bought more Amazon shares when it crashed.
And he was talking about our share is crashing, obviously, on the exchange, but we know we have the infrastructure to make the cash flows we've got. Like, we're not going to go out of business. We have the assets.
So you have to think about it like this. When you buy a house, right, and you bought the house for 5 million rand. And you know it's a flippin' nice house. And someone just pitches at your door and tells you, okay, I'll give you 2 million rand for the house. Don't go away. Go away. And that's how Warren Buffett explains it, because people understand that. So what happens now with Sasol is they had a 5 million rand house, and they leveraged it. Let's say that they paid for it 80% in debt. But now something happened in their ability to pay back that debt. So now they do have to sell a portion of that house. And now the market is only able to pay them 2 million rand or 1 million rand for half of the house. So that's the thing what happened. So, but if they had the capacity, if they had to leverage a bit less, or they had the cash flow. So if the oil price didn't crash, and maybe the oil price actually went up. And that might have just given them the cash flow to service their debt, to just see it through. And even just have the cost overruns. But now they actually have to take that hit. They have to, just because of the short-term distress.
Let's actually move on like the balance sheet, using our balance sheet analysis to their debt, which at the year ended 30 June 2020 was sitting at 174.6 billion rand, which is insane. I saw the CFO's notes at the front of their financial statements, and he said that we've reached peak gearing.
Yeah. No, they
114.5%. I was like, yo.
They over 100%.
They're 140.
The debt
I was
to
just
equity.
like, my dude, you're geared, hey?
Like, hey man, love me some debt.
No, that's why they're contemplating a rights issue now, which I think is because their share price went up. It gives them the opportunity.
It's because the increase from debt went from last year from 130.9 billion to 189.7 billion. And 174.6 billion of this 189.7 is just in US dollars.
No way. So they took our debt offshore.
Yes.
Obviously for Lake Charles.
Yes,
and
yes. And that's insane. Just think about just back to like liquidity, just the interest repayments of that in dollars. It's just, I can understand why it really hasn't been a great year. And it's just, management has come up with this resolution where they want to raise $6 billion by 2021 to kind of stabilize the situations that's happening with the debt. And like one of the things they said that is a rights issue of 2 billion in the first half of the next year, which would be the biggest rights issue in JSE history. Do you think this is feasible?
I think it's going to happen.
Yeah.
I think it's going to be taken up. A lot of institutions will take it up, I'm sure. Because especially the government pension fund, who is actually one of the major shareholders. I think they are the biggest shareholder of South Africa. And like you said, I mean, we're seeing the graying in the lines in the political environment where actually a lot of people are calling for the support by the pension fund, the government pension fund, and pension funds to actually back the economy a bit. And because, I mean, Sasol is one of the big economic drivers in South Africa. Company. Like you said, it's 2% of our tax revenue, 4% of our tax revenue.
Yeah.
And they employ 30,000 people. I'll probably say in South Africa, 20,000 people. I think there's going to be a big buy-in from those. Maybe not all of it, but I think a large portion.
It would come.
Just because...
Would you take up rights?
In Sasol at the moment? Yes, I will. Because they're trading at like 60% to their net asset value.
They're trading massively undervalued. Yeah.
So their net asset value at the moment is around 140 billion, and they're trading at 90 billion. So I'll take it up just because I know, even if they close the doors now, if they close the doors now, you'll still make a profit on that.
Yeah.
So just out of pure that I know it's a good business, I know it has proper assets. There are big private equity companies all over the world that will take up these assets, even at a discount. If they sell it at a 20% discount, it's still lower than that.
It seems a lot of people do share the sentiment. So why is it trading where it's trading?
Oh, because a lot of people... It's not going to be like that over the long term.
Because a lot of people say the same thing, like, but Sasol is still such a good company.
Yeah. Now, that's why when it traded, it didn't go beyond... like below 50 rand a share.
Yeah, I think
it was crazy.
Someone bought it at 33.
Yeah, I think someone was at around 33 at a time. And I mean,
which is insane.
The problem was if it stayed at 33 rand, then they were in massive trouble.
Yeah.
Because this rights issue is a big it's very important for them to recapitalize and restructure their balance sheet and change up some of those liabilities and get those gearing away. I think they probably want the gearing at debt to equity at only like 60%.
Yeah. Which is still manageable.
Yeah. So I mean,
they have a rights issue planned, and then this is like his plan. This is the plan. They said they're still finalizing and they're still working through it.
Yeah.
But this is the elements that management have told us already. They have a rights issue of $2 billion, which will be the biggest in JSE history. They have a conservation of $1 billion in cash. They didn't really say anything else. They just said we just have a $1 billion cash conservation. Some kind of
$1 billion, right?
Yeah.
So I'm kind of looking forward to hearing what they're going to say about that. And then they have an active asset disposal program intended to raise 2.5 billion. And a lot of potential buyers opt for the actual like little assets. So for part of like
do you know if they're selling off mostly South African or mostly offshore?
I think it's mostly
assets.
I think it's mostly.
I'm not too sure. I know it's a portion of Lake Charles, like we talked about, and I'm not too sure. They also haven't said anything, but I know in the headlines, there's been companies from like Nigeria and stuff who've just been looking to buy their assets, and like they have people literally lining up. So I actually don't doubt that they will raise $6 billion.
No, I think they'll be able to do it. I'm definitely sure. I'm also like, they have a very good management. They have very clever people up there. Like if you look at their balance sheet, their response to what's happening, they're piling up on the cash. Like they literally have double the cash reserves, cash and cash equivalents that they have from last year. They covered their a lot of their shortfall with short-term debt that they raised very quickly. I actually see that it wasn't just 19 billion, it was closer to 30 billion that they raised in short-term debt, which they probably, I think the rice issue is going to go directly to, like, firstly paying off that, because that most of the debt that they raised through the year was the short-term debt. So if they cover that, they already bring down that
a bit more stable,
very, very, like a lot better. Getting it under that 100% debt to equity ratio.
Because they just need to fight the short-term impact, and I mean, if they can get through 2021, in a relatively okay basis, we'll start seeing some improvement. Because I think it's going to
be a very interesting case study to look at. So I think that's why we're having this discussion. Why we're talking about this, because I mean, we're learning through all of this. We're seeing how the market behaves to that. So to get back to your question, Phila, why I think it's still trading at only 140 Rand a share now. It's 100% market sentiment, and your biggest thing is, I always say, the market stays irrational longer than investors can stay solvent. So if you can just invest in it and actually almost write that off and only expect it to get back to asset value in 3 years' time, you can afford that, then I don't think it's a bad opportunity.
I mean, I think all of that was a bit of a mouthful. I definitely learned so much from this. But I think the most interesting part, and what I was looking forward to, is to hear your takes.
Sasol, short or long?
I'm going long.
Why?
It depends, period. For me, period.
I mean,
long term. Let's say long term.
Short definitely.
That's why I think fundamentally, the balance sheet, fundamentally, if we look at the cash flows, the cash management, management oversights, and looking at their core assets, I do think that there's still a lot of value to unlock. And as Josh said, they're trading at 60% of their net asset value. So for in the 5-10 year range, I'm saying long, because fundamentally I do believe there's still a lot of value to unlock.
I'd also go long, and for the exact same reason, and also to add on, I know we have a huge outlook on just sustainable energy and stuff, but I don't think, like Josh said, it can just disappear. I don't think the need for Sasol can just disappear just right now. And so with that, I think the market will eventually also react and catch up to the cash flows once they manage to sort everything out, and hopefully
once they pay out that big dividend again.
And hopefully they're just operational too, especially like Charles, man. Hopefully they can just get luck on their side, and maybe they don't have too much damage, don't have too much to repair, and they can just have it operational and functional continuously and have that bring in money. I think, like Randy's saying, it's going to unlock a lot of value for them.
Yeah, so for me, just a disclaimer, everyone, like, we're not certified financial advisors.
Oh, yes, guys.
We just giving you our opinions on what we look at on our limited experience.
Don't quote us.
So we don't make a decision solely based on our on what we think. You must go dive deeper into this and make a decision for yourself, and really educate on what we're talking about, and what you actually can do better than us. So please feel free also to write us on our email or on Instagram or wherever. Tell us what you think, and tell us what we're saying wrong, and what you saw, what we didn't see.
Yeah.
So for me, I'll actually, in the short term, I won't trade Sasol because it's so extremely volatile.
It's too volatile.
But we're now, with a bit of research we did this week and last week, just looking at the financials, at their cash flows, if they can really restructure this their balance sheet, get their debt levels to a stronger position, I think over the long term we're going to see a proper recovery of Sasol. So I'll definitely, over the next 5, I'll take a long position of 5 years, because I think after 5 years, when I looked at that global petrochemical index, I think just because the world isn't really investing into those assets anymore, there might be an outflow from cash from those types of businesses. So that will start altering the growth of it. So I'll take a 5 year long position.
Okay. No, man, hopefully we can see the giant return, man. Sasol is a giant, especially on the
we
chairs.
need
I
it,
hope to see it. I really hope to see it. I think the 2021 financial results is going to be really interesting.
2021 is going to be the most important year, probably the most testing and important.
11th of September, we're going to look at it.
Yeah, next year.
Next year.
Yeah. We'll check it out. And then, so I actually enjoyed this a lot. And you guys, so you must check out, we'll put our show notes in the description of it. So we'll link up like a copy of our planning and everything, so you can actually see like exactly what we looked at with some of our resources, like access to the global petrochemical index and so on, which I think is quite cool to look at. So yeah, check it out there.
Okay.
All right, thanks guys. I think that's what it is for today. Please go check out our newsletter at finchatco.com. If you go into the domain, you can just pop in your email there and get proper news and opinion pieces from industry professionals and some of our own writers. Go check out our Instagram, FinChatCo, Twitter, FinChatCo, and our LinkedIn. Our LinkedIn is picking up quite good steam there. We're getting a lot of interest, which I think is really, really fantastic to see. But yeah, then until next time, everyone, goodbye.